How Sam Bankman-Fried's FTX crypto empire collapsed. The world of cryptocurrency has seen many ups and downs in the past few years. Digital currencies have been rocked by numerous scams and controversies, such as the infamous Terra Luna crash at the start of 2022. The recent collapse of FTX, which has shaken the world of digital currencies to its core, has been no different. It has gotten to the point where the world's second best cryptocurrency exchange, led by Sam Bankman-Fried, has declared bankruptcy. This has resulted in Sam moving from one of the industry's leaders to its villain in less than a week, while also losing the majority of his wealth. Make sure you watch this video till the end as we tell you all the details about how Sam Bankman-Fried's billion-dollar FTX crypto empire collapsed. The beginning. Sam Bankman-Fried's empire, which was once compared to that of financial titans like John Pierpont Morgan and Warren Buffett, came crashing down after a run on the crypto exchange left it with $1 billion shortfall and compelled the company to file for bankruptcy. It goes without saying that the crypto community has been in shock after FTX's demise, even though it became clearer and clearer over the past few months that Sam's corporate empire was in danger, and that he was punching well above his weight. It all started way back in 2017 with Sam establishing Alameda Research Company, which made money by acquiring and selling cryptocurrencies. Sam rented offices in Berkeley, California, not far from where he had grown up. The business quickly gained millions of dollars by taking advantage of Bitcoin's market inefficiencies. Bankman-Fried then moved the company to Hong Kong in 2019, where the regulatory climate was quite a bit friendlier. The success of Alameda encouraged the spring 2019 creation of the cryptocurrency exchange FTX, which was founded by Sam, along with a small group of traders that included Caroline Ellison, a former trader at the financial firm Jane Street. FTX quickly became one of the most trusted platforms for cryptocurrency investors to purchase, sell, and store digital assets easily. The rise of FTT. Both of his companies, Alameda and FTX, had a tight relationship. So much so that Alameda conducted substantial trading on the FTX platform, which helped it make a profit when FTX's other clients lost money. However, amidst all of this, Bankman-Fried often stated that Alameda was there only to give vital liquidity to FTX that in turn helps other users to complete deals on the exchange. Apparently, Caroline Ellison was managing Alameda, but it was quite clear that Bankman-Fried was also involved and had a say in major trade decisions. Alameda also retained a sizable amount of FTT tokens, but the precise number held by Alameda was unknown at the time. As time passed, the price of FTT began to gradually rise, and as a result, Alameda's asset worth also began to increase. The corporation, in turn, increased its balance sheet, which allowed it to borrow a larger amount of money. Quite understandably, if you can borrow money, you can invest it as well, with the goal of making even bigger returns. Thanks to FTX's success, a $2 billion venture fund was created and used to invest more in cryptocurrency businesses. Bankman-Fried's personal wealth peaked during this time, as he was now the face of the cryptocurrency market. FTX's hype was so big that everything from Formula One race cars to the Miami basketball facility had the FTX logo. The crypto billionaire went on an endless press tour, boasted that his balance sheet could one day be used to purchase Goldman Sachs, and established himself as a familiar figure in Washington, where he was a major supporter of the Democratic Party. Feud with Changpeng Zhao, or CZ. FTX had no outside investors on its board, despite the billions that the venture capital companies invested. This was evident when Sam went on a buying binge this year, investing in struggling crypto businesses that were hit hard by the Luna crash. While doing this, Sam also started criticizing Changpeng Zhao, the CEO of the leading cryptocurrency exchange Binance. This was particularly strange as, basically from the beginning of his career in the crypto world, Bankman-Fried and CZ were thought of as friends. Moreover, Binance had also taken a long-term position in the FTX token FTT to support the substantial expansion of the FTX ecosystem in 2019. Fast forward to the summer of 2022. Bankman-Fried was publicly criticizing Binance and urged regulators to investigate the exchange. To this day, it is unclear why, but it might have been either motivated by genuinely held suspicions, or it might have simply been because Binance was a fierce rival to FTX as an exchange and a potential buyer of other struggling cryptocurrency businesses. Whatever the case, Changpeng Zhao, the CEO of Binance, quickly recognized his opportunity to attack as some identified source offered CoinDesk access to Alameda's balance sheet, which revealed everything about the cryptocurrency exchange. The Big Leak. The crypto news media firm CoinDesk broke the news that FTX's sister company, Alameda, had $14.6 billion in assets, with $3.66 billion in unlocked FTT as its single largest asset and a stack of FTT collateral valued at $2.16 billion as its third largest entry. In addition, the business also had $8 billion in liabilities and $292 million in locked FTT tokens. This news sent shockwaves through the entire crypto market, and as soon as the crypto investors heard this, they realized how precarious the FTX situation was and started withdrawing their deposits at once. The leaked balance sheet revealed that a sizable portion of Alameda's assets was invested in FTX's illiquid FTT coin. It highlighted issues with the financial health of FTX as well as the trading company's solvency. CZ took this chance, and on November 6th, he posted on Twitter that Binance possesses a total of 2.1 billion FTT and BUSD. He did not stop there, as he dropped the bomb by stating that, in light of recent discoveries, Binance has decided to liquidate all remaining FTT on its books. Consequently, the last bit of investors who were hoping against hope in favor of FTT rushed to withdraw their funds from FTX. The final nail. In reaction to all of this, Bankman-Fried secretly looked for investors to fill the multi-billion-dollar vacuum left by the money that Alameda, CZ, and clients had withdrawn from FTX. All of the investors declined. So, in a desperate move, Sam Bankman-Fried turned to CZ. Then, on November 8th, Zhao announced in a public tweet that Binance has agreed to purchase the business with a non-binding clause. However, the sudden public disclosure that FTX needed a bailout led FTT's value to drop precipitously. The next day was even worse for Sam and FTX supporters, as CZ stated that he had done his research and didn't like what he found. Thereby, he won't be carrying out the deal. This was the last nail in the coffin for Bankman-Fried and FTX. As a result, FTX had to file for bankruptcy. Currently, federal prosecutors in New York are looking into Sam Bankman-Fried's management of FTX and have started reaching out to potential witnesses. Paul Weiss attorneys who are defending Bankman-Fried have recently withdrawn from the case, citing a conflict of interest. According to the media reports, Bankman-Fried will now be represented by David Mills, a criminal law professor at Stanford University's law school. Sam has also given up his positions of authority and has lost 94% of his personal wealth. In a recent interview conducted after the collapse, Sam Bankman-Fried expressed a lot of sadness about the demise of FTX. However, he still did not provide any proper information regarding the major issues involving him and FTX. However, he did agree with detractors in the crypto community who claimed he had widened his business interests across a large portion of the sector too soon. As FTX divisions have ceased operations and filed for bankruptcy, regulators are still trying to freeze the company's operations. Not only this, questions are being asked from the venture capital firms and investment funds who lavished roughly $2 billion on FTX with little conditions. Quite interestingly, the only one benefiting from this debacle is Binance, which is now the #1 and by far the largest cryptocurrency exchange in the world without any proper competitor, as many other exchanges such as Coinbase, Kraken, OKX, Bitfinex, and Huobi combined are nowhere near Binance's level. All in all, with this massive project failing and resulting in billions of dollar losses to investors all around the world, the digital currency industry has been hugely impacted in what was an already difficult time for crypto markets. Well guys, that's it from today's video. We hope you enjoyed the content of this video. If you did, show some love and hit that like button. And don't forget to subscribe to our channel so that you never miss out on any of the amazing videos that we have in store for you.